Good morning, everyone. All right. We got our first big red bar yesterday. Things you can see the hourly chart collapsing down into the pivot lows over there to the left. And we got a little bounce. Things moved up a little bit there on those economic reports. I don't know if they really had much of effect in reality, whatever, some reaction to it, a little bounce off of this extreme move. Obviously, we'll see where this goes. And we always do. You just look to the left and see where there's some resistance, which would be give or take here. And let me redraw that. All right, there. And so, two things to mention. First of all, prices went above and below it. So, it's what we call a minor resistance area because it's not what's directly to the left. However, you've got this pivot here right there where it fell from. So maybe it gets a little bit higher before sellers come in where they should. And then we'll see what effect that has or whether it just doesn't get any much higher than here. As we're looking at the futures, and you can see, on the news there, how it spiked up and just backing off a little bit at the moment. So we'll see if this begins to roll back over. I suspect, just based on historical patterns, that this will or should stay in the lower half of this wide range bar and it'll consolidate ahead of tomorrow, you know, light volume probably today and tomorrow. So hard to really say one way or the other whether buyers come in more aggressively today, but volatility picked up. We should expect we're probably going to see more of the same rather than where we've got a lot of these ranges, about the same from high to low. This was the holiday there after Thanksgiving, and then the new move up, and then a little tightness again, and so the first crack in the armor of this, which inevitably was going to come. Earlier in the week, we spoke about all of the wide range weekly bars, and so when you get a wide range bar after multiple bars moving up, typically the momentum begins to stall. And that's what's happening. And we'll see where this weekly bar ends, but a small candle body is one of the ways that we recognize that momentum is stalling, as well as just seeing ranges beginning to contract. Where that momentum stalls and where we get a wide range bar is the key to increasing the probability that this is a turning point. So before yesterday's bar, and it's still not totally out of the possibilities that it does, make a new all-time high. And we'll look at S&Ps, but yesterday, the futures, at least, is a continuous contract, made a peekaboo above the all-time high and then got rejected. So other than some news, maybe that was one of the reasons that sellers came in, that the futures hit the target. I think there was some news, whatever it was. Sellers certainly hit the bid, and it just sliced through these support areas on the hourly chart as if it wasn't there until it got down to a significant level. So S&Ps, spiders, I should say, same nasty crack coming down to these pivots there. It reached that support. Obviously, the most significant support is down here. I don't think it should get there, and that doesn't mean it won't. But the reason I'm saying that this trend, as strong as it was, it shouldn't get there. Right? It could get there, of course. Some backing and filling here. Maybe the 20 MA catches up. This goes sideways for a while. So when we see a big, nasty red bar like that, a couple of things that come to mind. What stocks look the same? Do we now have opportunities to sell call spreads? Because in the short term, odds are this won't get back above there. As far as shorting, that probably isn't a smart thing to do. unless you're day trading, certainly not on swing trading because of the strength of this advance. So with trends like this, one of the things that we look for is, do we get a red bar ignored? I don't think it's going to be ignored, meaning it's not going to, I don't think it's going to flip all the way back up today and negate that bar. However, it could lead into some sideways back and forth where the effects, the uncertainty created by this big red bar yesterday and that intraday sell-off, begins to dissipate. Well, exactly, Robert. So look, when you see, no matter how you look at this, whether you've got your latest greatest oscillator on there and now it rolled over from an overbought level, which to me is absolutely meaningless because it was overbought here and whatever. But a big bar like that, whether you're just looking at the bar, you're an intraday trader, you're Ichikumi cloud, whatever it might be, it creates bearish thoughts, or at least thoughts that the advance has stalled or it may be over. So now, a concept that I created many, many years ago wasn't necessarily for this, but it grew into that very helpful, powerful concept called bar by bar analysis, which forces you to look at what is, of course, the existing trend, but the bars. This bar creates some bearish expectations, and of course, that this upward trend may be over. But as we get new bars, right, let's say we get into, Monday, Tuesday of next week. I think Monday's closed, right? But we get into next week and prices are still backing and filling over here. And what'll happen is the hourly chart will begin to do this. And so the distance, those bars, daily bars I'm talking about, the distance prices move away from this bearish movement begins to dissipate. And then let's say we get a bottoming tail bar or a red bar ignored, you begin to shift into, hey, this momentum move and this correction through time created a price void, and this could go up. And this is what baffles the majorities that use oscillators and all of these indicators instead of price action, because they get stuck in the past, where what we're looking at has us saying, well, you know what, this was strong. It certainly got extended. Whatever happened here happened and it came down. And now buyers continued to step up and this may continue to move higher. We just don't know yet. All right. So right now, what we're looking at is maybe this is the high of the move, or at least short term, a correction is going to ensue. And we'll see what happens from here. But shorting an strong uptrend is not the smartest thing in the world. Credit spreads are a very intelligent thing to do, depending on premium and time to expiration. Day trades, one way or the other, which is always the case. And then we'll see where that goes. That's the bottom line. SPX, I'm not too interested, to tell you the truth. I don't think it's going back up to the high, but it's a bullish move. It might. These are the strikes. It could easily go down and test the bottom one. We don't have the no-brainer scenarios. So prices right now, based on where they are right about here. So this is going to gap up about halfway. There's still 20 minutes to go. I don't know where it's going to be in 20 minutes, but it's going to gap up about halfway or a little bit more into that red bar, which is, just looking at bar by bar and how we apply that. If you were to see that in the course, how we go through that with individual bars and show different bars that occur, and what that means is like, okay, would we have expected this to gap up more than halfway into a red bar of that size after this advance? I would say, well, probably not, but it's within the realm of possibilities. But it begins to shift your thinking from, hey, maybe last night it was like, oh, this thing could have gapped down today. And maybe if it gapped down to this pivot, we could have had a short-term buy setup and it would have rallied back up into the gap fill. Whereas now it's like, I'm not so sure at this point. So we have to see how that unfolds. Really, it's a lot. Once you get your focus on price action instead of indicators and oscillators and such, the dark clouds begin to move away from your brain. So it's really common sense, but you need something that guides your common sense to have it. That's the truth. All right. Industrials, big red bar closed under a breakout bar. That's bearish. I don't know where they're at right now. They're probably going to gap up, but as we look at these, we look at we can look at the futures. How much are they gapping up? So that's about halfway, and it's into this minor resistance. So this could turn back down, and we get some choppy price action. NQs, came down hard, closed under two prior bars, came down all the way to these pivots. Intraday, I believe it tried to stall there, and it just kept going. So, resistance, minor resistance on the hourly chart begins to back off. We just may be in a trading range here today, ahead of the holiday. And the Russell, that's a pretty big bar. Right? This was a bigger bar, right? And instead of the momentum stalling, the momentum was picking up, but right into the top of the trading range, and actually that exceeded it. Did the ETF exceed it? Yes, it did. And then we got a topping tail at a whole number of 200 at the top of a trading range. It seems like common sense to me that this is likely to chop around and stall here, and possibly, I'm going to drag this up here. Be aware if that comes down and fills that gap. And so the gap is one reference point, but this one straight up, look at the hourly chart. There's a giant void here. So it's going to be interesting. It's not like we had, let's think about it from this point of view, right? Because as we look at intraday charts, you got to think about that. You have a big red bar, right? There's a big red bar there. Now we go to the intraday charts and we see the big red bar is a giant move up. Now, what if we looked at this and we saw a giant move up, but then it went sideways from here? And so if it came down into the gap fill and into a sideways area, there would be a greater probability of that holding versus this is going to come down into nothing. So it's going to be interesting to see how this unfolds. But as we look at multiple time frames and the structure of what happens, right, the daily time frame could look exactly the same on two charts, but as we look at the structure intraday, it gives a very different perspective as to what the probabilities are. So keep that in mind. All right, SMHs were weak earlier. Yesterday some were showing strength, so that was a little bit of a, hey, be careful. That was a pretty big move down, multiple bars that left the trading range. We'll see where that goes. Interest rates, they're down here a little bit. We've been talking, they're into their destination here. Great, they're under 10 years under 4%, but it's coming down to this congestion area where we expect they'll stabilize. And if they start to move up, the market is probably going to correct further. That's the way it's been. So, nothing magical there. Just looking to the left. This still hasn't been fixed, unfortunately. So this is messed up, but we can look at the euro, get some perspective. And so this is still bullish, looking higher. It's got room to go up. So maybe the dollar can go down some more. Gold is up a little bit, but trading range. So when you look at your watch list and you see something's up, it doesn't mean it's doing anything of real significance. Silver down a little bit. That's not doing anything. Crude oil is down at the support and beginning to stabilize. So still in a downtrend. I would love for this to do a little retest area down here and see if it flips back up again. So keep that in mind going into next week. And, some of the things next week, is our last MT Live on Wednesday, and we're going to be reviewing, you know, this year and looking ahead to next year. And there's some pretty beaten down sectors that really underperformed this year amongst these great outperformers. And they may just be the instruments that lead in 2024. So we'll see how that unfolds. And, one of the things to listen to as you put on CNBC or Fox or whatever is, what are these money managers saying? And they typically going to gravitate toward where they believe is value, right? What underperforms. So before I started speaking, I hear a guy talking about the healthcare sector, which of course is a defensive and beaten down sector, which may do well next year, right? Alex is sharing has 10 a.m. economic reports, two big reports. So maybe that pushes things around a little bit. Thinner markets. And I don't know if he meant today. I'm looking at 10 o'clock. CB leading month over month, and gas stocks at 10:30. But tomorrow's got some big numbers coming. So we'll see how that goes. And the volume will be pretty light after 12 o'clock tomorrow. So that's it. We'll talk in the green room. All yours, Dan. Leading today. Well, the only thing today is CB leading index. We'll see what it does.
Yeah, Sam and I agreed to take tomorrow afternoon off, light volume holiday. He starts drinking at 11 a.m. anyway, so I'm not sure if we can rely on his trade ideas tomorrow. So yesterday we had a long talk about the turn that we've been looking for with the internals. And we said that's a crack in the armor. We wanted to see follow through to do, we would have done 2 DTE call spreads, but I couldn't find any with juice. But to go out to next week, I want more confidence that this is not going to get negated. And right now, yeah, based on 50% gap, I call that 50%. I don't know if it's going to get negated over time. And Greg had those nice little drawings on the chart of different scenarios. So let's see, I don't have a single alarm going off. We actually have very light inventory across the board, which is good. We didn't want to get caught in any turn with too many longs. We were very aggressive here. We were aggressive here. We were aggressive here. And now we're not. Now we've been selling into strength. So a couple earnings here. APOG, I see a print or two up here, but nothing. We'll come back. KMX, wow. When I first saw it gapping up here to 79, I was thinking, 30-minute high, maybe it could go to 82, but now it's at 84. So I have no interest in that. CTOS, not much volume. I see one print up here. We'll come back. AX. All right, it got worse progressively because I had an alarm at 127, and so that blew through that an hour ago. There's no pattern here. I don't know what to do with these. Milking $30. Now this one could be 30-minute high. So that's the best I've seen so far. I will put that in a window, other computer. FedEx. Yeah, we did a put spread on that yesterday, stopped out break even. With that big old topping tail. Yeah, nothing got saved in that afternoon sell-off. There's no reason yet, Stephen. It's up a little bit and going sideways. It's in a tight range, but there is no pattern right now for a day trade, long or short. I need more information. It's a mess. Uh, ADP holding. But yeah, that's a good point. Yeah, I remember we had that on our today's Thursday, right? So Wednesday, I had an alarm on that over Monday's high, and then I took it off my list yesterday. Boeing is not earnings, but it's up on. Remember when every single day that the 387 or what's it called 737 Max was in the news, and that's what would move this thing around. So that's what the news is today. But this is one powerful uptrend. In Greg's course about attributes of a strong trend, that is exactly a exhibit A. Amazing. And it all started with a breakdown failure. Wow. But 30-minute low. I'd do a call spread for tomorrow. But eyeballing this, it's a bullish gap, 80% into yesterday's bar. Let's see what it does at 10 a.m. MU had earnings. Now that's a bear trap. Gapping over big WRB, 85 bucks. Wow, that's off my charts here. That's a big gap, but it's holding incredibly well pre-market. So, we know that's gonna be helping the old SMHs here, which obviously they are. We have Nvidia, a half lot of a call spread that expires tomorrow. We took half profit into weakness yesterday, and I'll probably move stuff 30-minute high on that. Which we sold them for over $1. I'll bet we can get out at 20 cents now. And finally, BlackBerry. I don't know what keeps this company in business. Somebody said, "Oh, because I still have software." Okay, well, I thought they sold the software. I forget what blasted it here. Wow, that's real. And it might have been a hedge fund going after them, something like that. Oh, really? They did change their business model? Okay, I didn't know that. Interesting. Yes, Cisco's not looking so hot either. Yeah. All right, so that cream got an upgrade, whereas yesterday it got a downgrade. Now it got an upgrade, so their brokerage firms are fighting over it. So that's another bullish uptrend, daily, weekly, monthly. And AMD, I have as a call spread idea. Now, see, remember where I mentioned we talked about the degree of a turn? This is what we want. We remember MT Live yesterday on tails. So that was a big green bar, topping tail, now trading under it, range expansion, closing breakdown. It's eyeballing 70% gap up. I'm going to set an alarm at 137. That would be a fantastic call spread for tomorrow. But it's multi-bar turn. So that when we talk about credit spreads, that's a better one. Because the odds of it going over I always got to count the days going over Tuesday's high. It doesn't look likely in the next couple days, at least. I'm going to set an alarm 137. Tomorrow is Friday. So this would be an ideal 1 DTE call spread day. All right, this is just now a miscellaneous watch list. TV is an inverse head and shoulders. That looks fantastic. Little bull rectangle on the weekly. So that I like a lot. I have an alarm at 3:38. Said G, was bottoming. Solar beat up sector ripped. I was hoping for further kind of buy setup, higher low. FMC bottoming pattern. I'm watching, see how it does. We get the market pullback. GoDaddy. It looks like it's possibly a small M top right now. I would like a more potent reversal on this right side before shorting it, but this thing's on a tear and it's another power move like Boeing. So fading that is not easy. And so that's why we need the more potent. Look at Hershey here. Remember over here, I said this is either going to be a breakdown or it's going to be the start of a double bottom on the weekly. And we obviously see which way it broke. That actually was a beautiful day trade yesterday. Two inside bars from that closing breakdown. That was a beautiful setup, showing relative weakness. It didn't get very far, even with the market strength in the morning. Baba, I'm watching for hopeful higher low, double bottom situation. Positive bearings last week. Costco, I've been watching for a call spread. But as of now, actually, some of these, we're in the situation right now where even most day trades are going to be fighting the bias of the daily. But the way this is gapping up and going sideways, it looks like a potential day trade long. But you can't stick around very long because I don't think we're going over yesterday's high. That's for sure. Not today. I'm Avid. We're already in this, but another one bullish consolidation. Avgo was on my list yesterday for call spread. Now it's gapping up, which is good. So let me set an alarm at 11:20. So for call spreads, the gap up today is perfect because then we get to set new alarms like I'm doing right now. And then we have more information on, the pattern being a short-term top. And number two, we're going to get bigger credit. Yeah, Alex, I think, your point's well taken, but I think a better comparison is KWeb because that's these, Baba, Baidu stocks. And so this one gapping over a red bar. If there's any juice for tomorrow, that's actually a 26 put spread for tomorrow. AD line, wow, gapping up to 1900 and the tick over 1500. That is a broad-based opening. Wow. Check KWeb. All right, look, Bowling here. They'll give it up one of these days, but it doesn't look like it's going to be today. KWeb 26 for tomorrow. 5 cents by 21. No interest. Check our NVIDIA call spread. And we're still 15 points away from a short strike. Wow, I thought it would be less. I thought it'd be less juice. 505, 510. It's 40 cents right now. I thought it would be less. We covered half yesterday, I think at 28. Yeah, closed half. let's move stuff. 30-minute high now.